Continuing traders, just reviewing again, the simple model is the close and breakout. Now, the basic model, we're just looking for consolidation, a break of a level, the coil sideways into the US window, where we can position ourselves, put our stop loss in place, have a level to go to break even at, and then holding till close, taking profits into that consolidation in the last hour prior to the rollover. Now, obviously, instruments are going to vary in terms of how their volatility is, which is why this is important. Just number one, to recognize the overall template, just the simple close and breakout consolidation and the coil, and building your muscle memory on different instruments, how those setups will present. And West Texas is a classic example of that, because timings and the volatility of this instrument sometimes will play out a little bit differently. But number one, the biggest signal to us to bring this up on our watch list is the close and breakout. And you'll notice again a Thursday, so Wednesday closing and breakout, Wednesday making the high of month level. And we have a market that's creeping down into our US window before breaking the low of day level and coiling. Now, a little bit later than normal, but the violent nature of this move is what traders should recognize, that how this market set up and crept into the low, coiled sideways a little bit later, but a fantastic opportunity in terms of positioning yourself into a market that is going to explode very, very fast, delivering over $1.50 very quickly. But just the basic template, the coil sideways, creeping into the low of day level after closing and breakout, and then our coil into our EMAs. Again, a little bit later in terms of the timing window, oil starts trading around 9 a.m. New York time, an area to position ourselves into the market, place a stop loss, a break-even level back through the high of day, the current high of day, and then holding till close or into that last hour and taking profits. West Texas. Another example on crude or West Texas, where we have a similar sort of pattern, a market that closed and breakout on the Wednesday, our high of week level, and the market breaking out. So we have a market that's traded outside of the range and then broken out of the low of day level, coiling into our 9 a.m. hour and into the 10 a.m. hour, new 4-hour rotation. Same type of behavior, just a subtle variation. And again, building your muscle memory on how different instruments may set up. Close and breakout, the coil sideways, the breakout of a low of day level, the coil into our EMAs, entry, stop loss, break even level once it closes outside of that high of day level, and holding till close, the take profit level into that last hour in consolidation. West Texas. So I would encourage traders to review and study different instruments to see how often they can recognize this pattern. But again, you'll notice a Thursday, the close and breakout on a Wednesday, a high of week level in place, the breakout, the false breakout and coil sideways into our New York session, positioning ourselves in the entry. If you're scaling in as this market is starting to accelerate, placing our stop loss, going to break even and holding till close. Now, this particular trade setup delivered almost $3, and that's an explosive move coming out of that coil. When we get these markets building that coil like that, they're preparing for large explosive moves. The pound yen is a great example on a day where we have high impact major red news. I've talked about looking at cross rate pairs, and we have an excellent example of that here. The market had already closed in breakout and then dumped and closed as a first green day heading into non-farm payrolls Friday. But more importantly, just recognizing a well-engineered sideways coil heading into the non-farm payrolls release. Now, we've always talked about it, not positioning ourselves in front of high-impact major red news, and this is a classic example where the orange box represents where the ideal entry would have taken place. But because of the non-farm payrolls release, we wait until after the news, at which point we can position ourselves as best possible fill. As best possible fill after the news is released, we can position ourselves in the market, still manage our risk, as this market is potentially now moving away, adding in to this trade. Once it clears the high of month level, break even, allowing the trade to play out into the last few hours into consolidation and taking profits. Same process, but a beautiful, well-engineered chart. And you'll notice that the higher close on the Friday, the Thursday closing price on Friday is above Wednesday's, and that consolidation coil sits into that level before coiling into our EMAs prior to our non-farm payrolls. And that high of day level, which is underneath our high of month, is where the coiling is taking place for the explosive parabolic move. We wait for payrolls, we position ourselves in the market, put our stop loss in place. If we're adding into this trade as it's about to accelerate, moving our stop to break even at the high of month level and allowing that trade to play out. The pound yen currency pair, a pair that has a range expansion offering over $1 of potential take profits. We're looking at a Thursday again where we had a market on Wednesday close in breakout and coil sideways. So we have a market that's been making higher highs. It dumps down, closes in breakout on the downside, coiling sideways. We have PPI on the calendar, 8:30 a.m. New York time. And again, we're looking at a cross rate currency pair. So another example of when we have high impact major red news, that currency pairs, some of the cross rate pairs can offer us some excellent opportunities. We allow the 8:30 PPI release to take place. And once that news is released, we're looking for that coil inside of our news candle. We're already in line where we would have had an earlier entry, but the major red news kept us from positioning ourselves in this market. We can take positions in this market. Once that market breaks out and we don't have any other levels to the left, we can use price action levels for going to break even. We have a pin and a pullback and a continuation. Once that market continues through, or a measured range of movement, going to break even on that trade and then allowing that trade to play out. We get into our last hour, we can be taking profits and locking that in. But an example again where a market closes in breakout, a very well-engineered sideways coil into our EMAs, allowing the major red news to be released, positioning ourselves in the market or scaling in, putting our stop in place, allowing that to move through a level, going to break even, and then allowing the trade to play out. Pound Canadian. And a range of over $1 for profit taking. On these currency pairs, we're looking at in the area of 15 pips. When these markets are tightly coiled, we're looking at a risk of 15 pips and targeting at least $1 as our take profit level. Gold, we had a market that closed in breakout on Friday. Heading into our new week, new timing cycle, we have a market coiling sideways after closing in breakout into our US session window. Coiling sideways at closing price, heading into our US window. A beautiful coil allowing us to start to scale into this market, the really tightly wound EMAs, positioning ourselves in the market, placing our stop loss. Once this market breaks out, allowing that market to continue closing outside of the range, moving our stops to break even and allowing that trade to play out on the front side of a new week, that coil sideways, building your muscle memory, a beautiful, well-engineered coil sideways at closing price for the explosive range expansion on a Monday. At the beginning of a month, you'll notice this is the 4th of March, and that is the beginning of a new month now, potentially expanding the range at the beginning of March. Over 200 pips of movement, scalable, sizable, and a beautiful range expansion coil on a Monday. We have an example on another cryptocurrency pair, Ethereum, USD, a market that had closed in breakout and then traded sideways and putting in place the highest close of the month heading into our Monday or after our Friday close. I've talked about I ignore the weekends on crypto, but the most important thing is that the highest close of the month was in place and the market had already closed in breakout, trading sideways into the weekend. We have our high of month and three days of breakout traders in the market, a market that's trending, and a beautiful coil into our US session window, coiling sideways, and the opportunity now to scale in as this market is potentially now accelerating into the trend continuation trade. Closing outside of the high of month level, we can go to break even and allow that trade to continue in the long direction. Closing at the highest price of the month, coiling sideways into our US session window, entry, stop loss, break even, and take profit level at the beginning of a new week, second week of the month. So again, an example of where the month is still potentially now expanding the range in the long direction. Highest close of the month, coil sideways, entry, stop loss, break even, and take profits on cryptocurrency. And next, we're looking at another currency pair, the pound Australian. Now, we had a market that closed on Wednesday as the lowest closing price of the month, and then Thursday closing as a first green day. Now, not in breakout, but the market had already been in breakout short before putting in the low closing price of the month. And so coming up on our watch list, this is more about following pairs once they're in breakout and recognizing also we're in the last week, near the last week of the month, and we have a first green day signal coming off the lowest closing price of the month. How does price behave on the day? We get a beautifully well-engineered market that coils after putting in a low into our US window. And the thesis is this sideways coil now is preparing for an explosive move. Same process applies. We have our entry, our stop loss, and our break-even level. Now, there was 9:45 a.m. flash services PMI major red news for US session, but an example again of a cross rate pair. Now, we had a bit of a reaction once the markets traded through that, going to break even and allowing the trade to play out, delivering over 100 pips of profit for this trade. Now, more importantly, just recognizing a variation of the sideways coil coming off the lowest closing price of the month and a first green day signal into our closing range of the month. Cross rate pairs can offer us these opportunities, and whereas we have US dollar crosses, we'll sometimes have a lot more explosive volatility, but just recognizing, more importantly, a well-engineered template, a variation of it in that tightly coiled market at the lowest closing price of the month for an explosive reversal opportunity on a Friday, closing out the week. Pound Australian. So we've had some excellent examples and different types of presentations of that model. It's imperative to build your muscle memory and recognize when these markets are coiling. Those are the opportunities that are scalable. And again, simple process, taking a position. If we're scaling in, it doesn't matter. We're still managing our risk, putting our stop in place, having a break-even level. And you'll notice in this particular case, that is the previous high of day level. If we project that across, very, very close in the same area, but more importantly, having that position to break even and allowing the trade to play out towards the end of the day in that last hour, taking profits and walking away. Excellent, best of the best long trade examples. And in the next video, we'll be covering short examples, best of the best shorting examples in the next video.